Here, be sure and hit the like button when you come into the live stream. By hitting that like button, the YouTube algorithm will pick up the video, spread it around for more people to join in, and it's always a lot more fun to have these live streams when we have more people in the comment section joining in on the conversation. So thank you very much for hitting that like button when you jump into this live stream. Gonna talk a lot about the interest rates that are not going to be cut into the future. This is something that I think a lot of people within the economy had very high expectations for, especially 6 months ago. Now, the farther time goes on, the further time goes on, the more we start to realize that the inflationary scenario that a lot of people were anticipating was going to disappear has not just disappeared, right? It's ended up staying much more elevated than what a lot of people were anticipating. And this is not a surprise to me. Now, it is a surprise to me that the people out there don't recognize exactly what it is that the Federal Reserve is attempting to do, because most people think that the Federal Reserve is after this 2% target. And even listening to Jerome Powell yesterday give his press conference statement, he even said it in there that they have this 2% goal. But if you understood what the goal was to begin with, then you would know that it's not to achieve a 2%, it's to achieve 2% over time, right? They've moved to this flexible average inflation targeting, FAIT. They actually have this name for it, flexible average inflation targeting regime. Like, this is the policy that they are now trying to conduct monetary policy with. And if you just type that into the Google search, those words, flexible average inflation targeting, you will find that back in August of 2020, the Federal Reserve completely changed the way that it is that they are viewing inflation, in that they are not going for a 2% target, but actually going to achieve 2% over time. And that appropriate monetary policy would seek to achieve inflation moderately above 2% for some time. Now, nobody knows exactly what the definition of this is. Nobody knows what moderately above 2% is, and nobody knows what the timeline is for some time. Like, those two are not defined within the Federal Reserve statement, but yet that's what they are saying is going to be what they are going to be doing for monetary policy, is interest rate or elevated inflation moderately above 2% for some time, and no mathematical formula to figure that out. So when we think about what it is that the Federal Reserve is truly up to, like really up to, they are mandated to do two things. They are not mandated to make sure the markets stay healthy. They are not mandated to make sure that the administration stays in office. They are not mandated to do a lot of the things that people are anticipating what it is that the Federal Reserve is going to do when it comes to the interest rate adjustments. They think that they're out there for corporate greed or whatever. I mean, all that stuff takes place. Like, I don't deny the fact that that happens, but it's more of men understanding the situation at hand and taking advantage of it. It's not them saying, hey, we're going to do this to the people. It's the people out there looking at it saying, hey, I recognize the situation and I'm going to do this to the people, right? And that's really what the situation is more like. Now, understanding it from that fashion then says, okay, we can blame politicians for it, but really we have to blame politicians for taking advantage of a situation. That's really what the bottom line to it is. The Federal Reserve is trying to maintain low and stable prices and full employment. Now, again, there is no exact definition for low and stable prices, and there is no real definition for what is appropriate full employment or maximum employment. There's no number for these things. Now, understanding what it is that the Federal Reserve would typically do with employment or unemployment is that we have to also understand that it's not just a neutral interest rate for the Fed funds, where they are neither restricting nor accommodating the economy. There's also a neutral unemployment rate, where the amount of people who are working are neutral to the economy. Any more people work and they would start creating an inflationary scenario. Less people working, you would have a deflationary scenario. There is a neutral employment rate. And now what's very interesting about this neutral employment rate is that the adjustment of interest rates doesn't necessarily impact the employment, and especially the stimulation or restrictions coming to the economy from the rise or fall of employment due to the interest rate adjustments. Now, I know a lot of that's really confusing for a lot of people to hear, but to explain that simply, the Federal Reserve would typically want to raise or lower interest rates to try and create stimulative or restrictive circumstances within the economy. If they are stimulative circumstances, a lot of people think, okay, that's trying to get the consumer out there borrowing money to buy things. That's not the case, right? That's the shortened view. There is much more to understand inside of that, because yes, that is true, right? That statement is true, but it's more complicated than that, because what they are really trying to do with the Federal Reserve by lowering interest rates is to try and create a situation in which that corporations and businesses will start to invest. Because if you can get these people to invest, what they are going to do is start building new buildings, buying more equipment, and hiring new people. Hiring the people is the situation in which the Federal Reserve is looking for stimulating the economy. More people working are more consumers. More consumers, supply-demand imbalances. Once you have more consumers taken from the supply, the demand goes up, the supply comes down, prices go up. That's the inflationary scenario that is created by the lowering of interest rates. And then exactly the opposite of that is meant to occur, where the Federal Reserve would raise interest rates, less corporate business management investment into new buildings, equipment, and hiring people. You end up having a situation in which that you may end up actually laying people off due to the lack of business. Those unemployment starts to rise from those people losing their jobs. The unemployment goes up. Now there's less consumers in the economy. Less consumers mean that supply can now come in line with demand. And then you have prices stop going up, and in some cases even come down. So that's the typical way that the Federal Reserve would operate. It doesn't work. They know that failed, right? Even within their own statements, they have said that let me see if Michelle Bowman worded it pretty particularly. She said the low interest rates seem, or how did it go? The insensitivity of the labor market to inflation from the low interest rates. Basically saying that once they lowered the interest rates and the unemployment came way down, lots of people working, that did not create the inflationary scenario that they had looked for, that typically they would have experienced. This is something that we had saw towards the end of the Trump administration. Even the Obama administration was facing some of these issues, right? So as Trump administration was going through and screaming about how there was the best jobs number in history and there's no inflation and all the low interest rates and all that other stuff, was proving the case that the low interest rates does not create the inflationary scenario through the employment. People were working, tight jobs market, no inflation. Right? And this was prior to COVID. And just go back and just Google it. I mean, just look at some of the Trump statements back in the day. He was screaming that he wanted to fire Jerome Powell, take interest rates into negative territory, and fire up the printing press. This is all coming from the Trump administration in an attempt to try and find the inflationary scenario. Right? He said there was no inflation. So very important to know that, because now it comes down to the understanding of what it is that does move these markets. What is it that the Federal Reserve is attempting to do? Right? The Federal Reserve is all about jawboning. It's all about the forward guidance. It's all about the wording they use. It's all about the perception of the markets themselves. All right? That's what is everything. Like, who was that? I mean, we were just talking about it. I can't remember the damn scientist's name. That Russian scientist with the dogs and the ringing of the bell, and the dogs heard the bell and they would start to salivate, thinking that they were going to get fed, and it just took the ringing of the bell to click that trigger that understanding or that feeling or that belief within the dogs that they were about ready to get fed. It's almost the same thing, right? What was that guy, Pavlov, whatever his name was, right? You guys know who I'm talking about. But you think about it, there's something very similar to that has taken place. Like every time that the idea that the Federal Reserve is going to either be cutting interest rates or not cutting interest rates is like ringing the bell, right? Like if they're going to cut interest rates, it's like ringing the bell. The people start to salivate. They're like, oh God, I'm going to go out there and start doing stuff. They actually believe and start conducting themselves in a way that they actually start to, conduct themselves in a way that it's already happened, right? And so this is like very much in that same sort of like triggering moment. It's like ringing the bell and the dog salivates. It's like, hey, we're going to lower interest rates in the future if things are going to continue on this way, and the people start to salivate. Right? Think about it. That's what was taking place at the end of last year with the dot plot of 7 interest rates coming to the future. Everybody was just flipping out and believing that they were going to be able to, refinance into the future. They were taking out mortgages. There was all kinds of activity that started to take place. All right. Let's see. You guys have any questions here? Let's go through some of this. Good afternoon from Lakeland, Florida. Hey, it's great to see you, Kevin. Brody, thank you. Thank you for being here, brother. All right. Rich says, yo. All right. Thanks, Dan. Yes, please hit the like button on the way into the stream. Everyone, please. Yes, do so. 2-ish. Yeah, that's kind of 2-ish. It's kind of funny, isn't it? All right. How come I'm not getting any? Is there no comments here? All right. Top chat. There we go. Now we're getting it. Okay. Pavlov. That's it. Pavlov. Okay, you guys got it. You know who I'm talking about. All right. So funny. We need to keep the perception of the market as good when the whole damn thing is fake. Yeah, and that's just the theory. Clear Glass Studios, and that's just the thing to to really take into consideration. Like, is it really that fake? Is it really that screwed? Like, I really have to take into consideration that the traditional forms in which that most people would conduct themselves, you graduate high school, you may go and get a degree at a college or something like, from a college, and then go and start a career, or maybe you just right out of high school, go and take a 9-to-5 job and just start immediately going right into the workforce. By doing that, and then it's, working hard and saving, and then trying to acquire some of the nicer things in life, like a new car or house or something like that. This would be like the traditional fashion. Like, people would anticipate, hey man, when I'm, this is the way that it would go. It doesn't work like that, right? So the idea of doing something like that, that's not real, that's fake. Like, you can't do it like that. I mean, I guess some people probably could in some areas, but for the most part, most people aren't going to do it like that. But I think about like, okay, well, I mean, is it fake that I was able to, start a YouTube channel, build that up, be able to acquire money, beyond that of my day job, and then acquire some of the finer things that I would find in life that I would typically would have gotten if I had a 9-to-5 job. So it doesn't work like that anymore, knowing that you have to do other things in life. You have to either start a side hustle, side business, second job, figure out some other way, because a 9-to-5 job just isn't going to do it anymore. Like, it's just, I take it back all the way down to not being able to blame anybody. Like, there's no, if you can blame somebody, then you would also have to take into consideration that you would be able to find somebody who could fix it. So, if you say he did it, then you would have to say he can fix it, or I can fix, something like that. If there is no blame, it was just like, hey, this happened, and now I have to figure out what it is that I need to do about this. Right? Because I can't expect them to change, and I can't expect somebody else to come in and fix the whole thing, right? So if it is fake, if it is wrong, if it is broken, if it is messed up, then figure out how it is like that, and then be able to, work around it, or figure out what it is that you need to do to take advantage of those situations, and be able to elevate yourself beyond it. There's never not an opportunity, right? Like, people are, even people ask me all the time. I was just like, man, I was thinking about being in the construction trade, but it's not really looking that great, although that there should be a lot of houses, blah, blah, blah. They go on, what do you think? Should I be in the construction trade or whatever? And I'm thinking to myself, there's never been a time in history, ever, since the beginning of mankind, has there ever been a time that humans weren't trying to put some sort of structure together? Ever. Never in the history of time has that ever occurred, that the human population of the planet Earth was not trying to put structures together. They're always trying to do that. There is always a job in construction somewhere, right? Now, whether it's prevalent or, whether it's a feast or famine kind of thing, there's never been a time that a structure wasn't trying to be put together, maintained, or something of that nature. All right, let's continue on here. Let's talk interest rate cuts or something. All right, I disagree. Paper profits made through a consistent strategy can mean you're built a discipline you can use in real markets. I totally agree with that. Yeah. My gains have been realized again and again. If you know, you know. Otherwise, keep crying. That's right. My mining stocks are worse than a savings account. They do nothing. Yeah. Don't blame me there, man. All right. Unless there is a significant market decline, rates should remain at current levels. I don't even think with a significant market decline. Like, I would think it would take, like, I mean, a lot of people look at, like, the market, saying, like, if the stock market crashes or the housing market crashes. Now, I would agree that the Federal Reserve might step up if the mortgage market is not functioning, meaning that it may not be a loan that you want, it may not even be a good loan, but there is a loan available. That is what the Federal Reserve is trying to maintain. They do not want a frozen financial market, not in the mortgages, not in anywhere. Anybody who wants a loan, they should be able to get one. Now, whether or not it's a good loan, again, that's a different story. But that's what the Federal Reserve is up to when it comes to markets, is to make sure that everybody has access to credit, or a reasonable access to credit. So the Federal Reserve is not going to care if the housing market starts to crash, if the stock market starts to crash. If these things start leading into high unemployment, then the Federal Reserve would start to adjust their interest rates in order to deal with the dual mandate. But their mandate is not market conditions. Their mandate is not administration, power or something like that. It's not, it doesn't have anything to do with that. I cannot find, and now I know a lot of people will argue with that, and I totally get it, because there would have been a time in my life I would argue with that too. The only reason why I can say that is because I cannot find anything within their statements that will contradict that. Anything. Not a single thing within their own statements. Now, there's a lot of people out there who will say different. There's a lot of accusations, and I shouldn't say like false evidence, but misguided or misunderstood evidence that would lead, somebody to believe that the Federal Reserve might be political or something of that nature. I can't find it. I can't find anything within their strategies, within their statements, anything out there that has any kind of belief of a political movement involved within their monetary policies. That being said, an individual within the FOMC, the Federal Open Market Committee, the voting members of there, they do have a political position, right? Everybody does. You can't, even if you're apolitical, you're going to have a political belief. You're either going to be libertarian, you're either going to be conservative, you're either going to be, liberal or something of that nature. You're going to have some sort of understanding. You're not going to just be somebody go, I have no opinion of this matter whatsoever, right? And if that's the case, then you're probably not watching this video anyway. And so yes, there are individual political beliefs within the individual FOMC voting member, right? I would agree to that, and I can't argue that at all. There's 12 of them. They each have their own vote. There's alternatives. There's alternates to it, and then there's a couple of advisors. 19 people on the FOMC, and each one of them is going to have their own political belief on what it is that they feel should be taking place going into the future when it comes to their own political belief. However, when it comes to monetary policy strategies, I cannot find any political information brought into it at all. Like, none. Like, I would say it if I could find it. I'd be like, right there, bang, there it is, but I can't find it, right? Everything within the monetary policy strategies is got politics completely separated from it. Okay. Huge fan. Thank you for your work. What do you think of Saudi Arabia banning the dollar for oil trade? Okay, this is something that keeps coming up. I should probably do a video just on this, because I feel like every single, I get this question a lot. Let me see if I could do this for you. Let me see if I can do this in a visual here. Let me see. Do I have a pen? All right, right here. Okay. I don't know what the exact numbers are, but it's going to be something of this nature. Is going to be, the way I do this is going to be fairly reasonable to the situation. Okay. What you have, let's just imagine this is oil. right? Now, I don't know how much deals are done in oil, right, every day, right? But we're just going to imagine this circle is oil, right? Now, I'm going to draw another circle, and this is going to represent dollars, right? Dollars. So, all the oil traded in the world is traded in dollars, right? For the most part. A little bit isn't, but for the most part, it's this marriage that is happening right here between oil and dollars. So if an oil is being sold to any nation, whether it's, nations that don't have anything to do with the United States, whatever, generally that deal is done in oil or done in dollars. Now, most world trade is done in dollars, right? Very little is done in anything other than dollars, but there is some other currencies out there. So what is going to happen is they're going to separate this, right? This marriage, saying that oil is going to trade in all kinds of other currencies and not just the dollar, right? So now there's a lot of oil deals being done out there in the world. You think about it. I mean, this is the most vital commodity to the human existence is oil, right? Okay, so if everybody is in need of oil, everybody, there is a need for dollars to do that transaction. But you don't need to use dollars. You can use anything else. You could use like euros, right, from the EU. You can use like Japanese yen. You can use yuan. Here, I can't even draw yuan in there, so I'll just write yuan right here, right? So you can use these other little currencies. You can use euros, and you can use Japanese yen, and you can use even a little bit of yuan. Like, there's some yuan out there you might be able to use, but all this currency out there has to be able to facilitate all the trading of oil. There isn't enough of it. There's not enough of this currency to do all the oil trades. They don't have, even if they wanted to, they're like, hey, we're not going to do it. Here's another way of looking at it. That's kind of a messed up way. Let's do it a different way. Let's take out our wallets, right? In our wallet, we can imagine a wallet as as a country, as a state, as anything, right? As yourself. In your wallet, you have a $100 bill. And then you have a 20 euro, and then you have a $2 yen, right? $2 worth of yen, whatever that would work out to, 200 yen or whatever it is. 300 yen. So you have $2 worth of yen, right? Not very much, right? And then you have like in your pocket, you probably have like 35 cents of yuan, right? So you got a $100 bill, you got 20 euros, you got 5 Japanese yen, or $2 in Japanese yen, and you got 35 cents in yuan. And you go up and you're going to fill up at the gas pump. And the gas pump will take all the currency, like any currency, it doesn't matter, whatever one you want to use, right? So now if you consider that your wallet is representative of all the currencies in the entire world, right? Most of it in your wallet being US dollars, but you also have 20 euros, and you also have, a little bit of Japanese yen, and you have a tiny little bit of yuan. All right. Now, you go to the pump, you fill up, it's $75 to fill your tank. You spend all your euros, all the yen, all the yuan, all that other stuff, and you're still not going to have enough currency to completely finish the transactions. You're going to need your dollars. All right? This is the case. Like, no matter how you look at it, there is simply just not enough other currencies out there to facilitate the trade. Even if they wanted to, they're like, no, we're not going to do it at $1. Well, I guess you ain't doing it then. You ain't doing a trade because there isn't enough of any other currency out there in order to facilitate that trade. See, that's the problem. That's the problem that I think is most prevalent throughout the world right now that a lot of people are just not willing to see. The demand for dollars is so high that there is nothing else out there that can compete. Like, a distant second is so far away. Like, you can't even, it's just like, can they hurry up? And it was just like, can you put some nitrous, a jetpack, something on there to hurry up and get them to not only issue out more debt, because they have to provide a safe and liquid asset if they want to do world trade like the United States Treasury has done, right? Go into some serious amount of debt. No nation is even coming close to doing that, right? But they'd have to do that if they want to compete with the dollar. They have to go into massive debt. So some nation might be willing to do it. Now, the rest of the world has to be convinced to buy that debt and to believe that it's a safe and liquid asset like the U.S. Treasury, right? Now, no nation is coming to that. Nobody's doing that, right? So let's say they did. Let's say some nation did decide that they were going to go into massive debt spending like the United States has done to provide the world with a safe and liquid asset that's similar to the U.S. Treasury. Now, who's going to trust? Who's going to trust that nation? I'm just curious. Like, I mean, China's like, stepping up like, hey, we want to do this. Do you want to trust China? Do you think the rest of the world wants to trust China? But that's what would have to happen. You would have to trust China to pay back their debts, and they would have to go into massive deficit spending in order to provide the world with that debt, that safe and liquid asset, like the U.S. Treasury. And then China would not want to be an exporter of stuff. That would have to be a bad no-no, because you're a debt-based currency trying to provide the world with liquidity and to provide the world with the yuan, the dollar, the currency, in order to facilitate all this damn oil trade that's happening out there. And in order to do that, you have to be able to get that yuan out there to the world. How do you do that? Well, you're going to have to go into trade deficits, meaning that you are going to start buying more than what you sell. When you buy stuff, you export dollars. And this is what the United States is doing more than any other nation can do out there. Massive deficit spending, massive trade deficits. Without those two things, you cannot have a world reserve currency. There's no other nation that's even going to come close to competing against it. Even if the euro wanted to do it, it wouldn't have enough euros in order to facilitate all that trade. And that's the problem. I mean, go ahead, Saudi, do it, man. Like, go for it. It doesn't bother me none, right? Because even if you were able to try, even if you were to find other people to do deals out there, there's not enough of the currency out there to facilitate all the trades. You go hungry if you don't use dollars. So simply, you just go hungry. I mean, I would love to sell all this oil, and there's people out there going, I don't have any money to give you, man. There ain't enough euros to provide for all the oil that you want to sell. Now, if you want to take dollars, there's loads of dollars out there. All kinds of them. So just because they severed it doesn't mean that they're not going to do it, right? I bet you they end up doing more deals in dollars than they ever did, because there's nothing else that they can do it in. There's just simply nothing else. All right, foreign governments net selling bonds held in USD. BRICS is working on the benefit of the Fed for the time being. I mean, and I really do believe that. I think I agree with you, Brody. I mean, the BRICS nations, I think by trying to do transactions outside of the dollar in their own sovereign currencies, which is very cumbersome, it doesn't work for them, it's not profitable for them. It's like everything about it is not a decent strategy, except for the fact that the dollar has been weaponized and they have this fear that they're going to be sanctioned or whatever against, and so they just try and do these things outside of the dollar. But the fact is that even attempting to do it doesn't work out. It does. I mean, here's the thing. If there was something else that could replace the dollar, it would. That's it. Like, if there was something else that could do it, it would. It would just do it, right? And it doesn't matter if governments say, oh, we're not going to allow it to happen. It can't stop it. You can't stop Bitcoin. Can't stop gold trade. You can't stop some of these things. You can't stop black market. You can't stop barter, right? You can't stop these things. And if the exact attempt to try and stop it actually causes that to be more valuable. With risk comes reward. So the moment that you say, you can't do this, or it's illegal, or you're going to be punished for this, boom, there goes the price. Think about anything that anybody wants. Sex, drugs, firearms, whatever. Put a law against it and say that it's illegal. There goes the price. What time is it? All right, I got about another 5-10 minutes, guys, and I'm going to have to call it quits. I hope you guys are having a great time. We got 339 people with 116 likes. Go hit that like button. We got a few more minutes here. YouTube algorithm loves it when you hit the like button. All right, why couldn't they just trade their dollars for their own currency, then buy oil? That would put more of their currency in the market. Okay, very, very good question there. All right, Dan. So, for example, Russia was doing deals with India, right? We're going to sell oil. We're going to take rupees. Russia took a bunch of rupees. Now they're sitting on a shit pot of rupees. And they don't know what to do with them because nobody else wants rupees, right? So they're like, okay, no problem. We can deal with this. What we'll do is we can find, like Russia's saying, okay, they're not in a good position, right? They only have a couple of things they can do. It's not a good idea. What they could do is start selling those rupees for whatever currency they want, right? Because nobody else is accepting rupees, they would have to sell them for dollars. The moment that they start selling those rupees for dollars, down goes the rupee price, and they might as well just be setting that currency on fire, right? Because now the profit that they were making on it is basically being destroyed by selling the rupees off, right? Does that kind of make sense? I mean, if you have a ton of something and you start throwing it into the market, the price of it starts to come down. And that's exactly what would happen if Russia was to try and get rid of those rupees, try to sell them for dollars or another currency. Now, where do you go with the rupees? India's saying, hey, you can come right back here with it. So now Russia's just like, well, what if you have stuff that I don't want? I want stuff from those guys over there. But they don't take rupees. Right? So India's just like, well, maybe you can invest back with us. What do you want? We'll start manufacturing it. Well, that works out pretty well for India, doesn't it? Not only do they get to be the seller, the manufacturer, and all that other stuff. So how is this a benefit to Russia? It's not, right? Russia was trying to sell oil, but they couldn't find anybody to sell it to because they couldn't use dollars. So they were selling to India in rupees, and then that failed on them too. Because now getting rid of the rupees or trying to exchange the rupees for the things that they really want became a very difficult, cumbersome thing. India didn't have everything that Russia wanted, right? And Russia couldn't go and get the things that they wanted from the rest of the people out there because the rest of the people didn't want rupees. And in order to acquire the currency that they wanted to, in order to buy the stuff that was outside of their nation from these other people, they would have to devalue the rupee in order to get the currency that those other people wanted. It fails them. It just doesn't work. Like, you can't have competing world currencies. It doesn't work like that. Gresham's law will always kick in, right? Bad money will chase out the good. So if you're introducing gold, it will get hoarded. If you're introducing a bad currency, nobody's going to use it. It has to be a symbiotic relationship with the dollar in order for it to take over. Because if it's a symbiotic relationship with the dollar, then nobody would know any difference. This is how the dollar was able to take over gold. See, people looked at it and they said, okay, well, if I have a certain amount of dollars, then I will get a fixed amount of gold. Some people believed it, like everybody, right? Because you could just go down with your money and get your gold. And then one day they said, no, you can't do that anymore, because they realized there was far too many dollars out there, and this symbiotic relationship of having a fixed amount of dollars to a certain amount of gold failed. And then people realized, man, this isn't the same thing anymore. They used to think dollars were gold. It was as good as gold. And then they realized it's not. Gold is completely different from paper, and gold got hoarded away and paper went out into the system. And this is how the dollar ended up taking over. So if you want to replace the dollar, you have to do it something very similar to that. And you're not going to be able to come up with a good currency. You have to come in with a matching, something that is symbiotic, something that says, hey, the two of us can work together, something very much like a stable coin. Stable coins are going to be the next move, not a competing currency. It has to be something that is trading one-to-one, saying, hey, if you have this, this, and this, and the same thing, right? Even though they might be separate. And so as people start using the stable coin, the cash can be disappeared, right? It can be pulled out of the system, leaving you with nothing but stable coins. Who's to say what those stable coins are backed by? Does it have to be a dollar? I mean, now it does, because that's how we're going to be accepting of it. But give it time and there's no more dollars in the system and all you're using is stable coins, who's to say what that's backed by? That's how this can roll. You can't compete. You can't introduce a competitive currency. Because if it's a good currency, it'll get hoarded, and if it's a bad currency, nobody will use it. If you want to watch the dollar fail and then introduce another currency, okay, I can go down for that, something like that. Dollar's not failing. It's not even coming remotely close to failing. Right? As people want to say that it's failing and put out this information that it's failing, and then use examples of China dumping U.S. Treasury debt, not realizing that the exact same statement is saying that they are acquiring cash. Right? Say that again. Let's say that again. The Chinese government dumping U.S. Treasuries is like saying they are trying to acquire cash. because that's exactly what is happening when you're dumping U.S. treasuries. You sell a treasury, you acquire cash. What do you do with that cash? You pay off your debts. Why are they doing that? Because they have so much dollar-denominated debt that exists out there. There's no other way of acquiring the cash that they need in order the dollars they need to pay off those debts. Their exports are not as prevalent as it once was in order to acquire the cash that they need. You can't, it's like, this is an obvious situation that was taking place from years ago that was talked about. Let me see if I got it right here. It's called Dollar Funding Stresses in China. Shit, and I don't have, I was going to show you the, oh man, I got to go through all this stuff. I just got to throw it all away. And I guess I don't have it in here. But you can just go and look it up yourself. From the Federal Reserve, China funding stresses, right? Let's see, China dollar funding stresses, right? They talk about all the dollar-denominated debt that exists in China. And this isn't just China. I mean, this problem exists around the entire globe, right? But there is so much dollar-denominated debt inside of China that there is no way that they can just completely abandon the dollar without completely destroying their own credit. Right? You can see it happening within, let me just because this is kind of complicated. Let me just kind of dial it back a little bit and so we can see somewhat of an example of this. If you look at the Chinese property developers, they're in a horrible position right now, right? These property developers are going out of business. They're having a hard time making ends meet. And the majority of it is due to the fact that they were having troubles paying their dollar-denominated debt. Now, they carry debts just like everybody else. Most of it is in the Chinese yuan. However, there is a portion of it that is done in US dollars. That portion that is done in US dollars is by far the most critical portion of their credit. Because if that starts to fail, if they cannot pay that, if that starts to default, they cannot acquire the dollars to pay back their dollar-denominated debt, then that starts destroying their credit rating. It is by far the most important one. So as cash becomes less available to these property developers, as the slowdown has taken place within China, they start suffering with the fact that they are not able to make those dollar-denominated payments. As that starts to take place, the whole thing starts to collapse on them. And it's all due to dollar strength. The fact that they cannot get the dollars. It's a weapon of mass proportion in that fashion. And in fact, China uses that same technique against other nations. They have lent money. You guys have heard of the Belt and Road Initiative, right? Well, this is where China went around the globe doing infrastructure projects for other people. They were loaning out money to these nations to build highways and set up mining operations and ports and all kinds of stuff, right? And now by doing this, by lending out this money to these people, they did it in dollars. And now as they fail to acquire the dollars that they need to pay back those debts, those projects become property of China. Isn't that, see how they're using it? See, if the dollar strengthens, which actually hurts China in a lot of ways, you know, as the economy starts to slow down and less people are able to make purchases, and China's getting hurt by this, and the dollar strengthens, these other nations who begin to fail to provide their dollar payments starts benefiting China as those defaults are actually properties of China. Yeah. See, this is the craziness that we live through nowadays. All right, we got Lorenzo with $4.99. Thank you so much. Not to mention the fact that it gives India the ability to price gouge Russia since they can't spend those rupees anywhere else. Yeah, and then again, if they do something like that, then that would discourage Russia from trying to provide them with the oil that they're looking for anyway. And you know what was kind of screwed about that is that India was buying that oil, refining it, and then selling it back out there to the rest of the globe, right? Or just like, I don't even know what they were refining. I think they might have just been returning right back around and selling cheap Russian oil out there to the globe. Yeah. Simon got welcome to the jungle in my heart. Yep, I love it. I totally did that off of Guns N' Roses. Yeah. All right. That is the goal, and even the countries against the dollar are in on it. It's global goal. They're friends with the common goal. All right. Let me see here. Monetize the debt, pay off loans using money with equal face value but less buying power. In other words, robbing and raiding your savings and investment. Nothing about the Saudis. Again, it's all the oil that is done in dollars. It doesn't matter if it's Saudi Arabia or Russia or anybody else. It's the same situation that is going to take place, is that there just simply is not enough dollars to do the deals in any other currency. I don't care if it's Saudi. Like, again, sever the marriage, start using euros, Japanese yen, Chinese yuan, and you're going to only be able to do a fraction of the oil transactions that you have ever done in your past if you don't use the dollars. That's all there is to it. If Saudi Arabia does not use dollars, they are out of business. That's it. All right. My mom says hi. Thank you, David. Well, hi back to mom. Tristan says, makes sense. Thank you. Yeah, you bet. No problem. And I don't mean to sound like cocky or arrogant or anything like that, but it's just like, it's so hard when I see so much like mainstream in what would be considered like credible sources, like, what in my mind would be like a legitimate source of information that you would typically find, right? Now, knowing that all media now is propaganda, like, because I've seen it not only in the lumber industry, but definitely with monetary policy, that all forms of media is propaganda. Every one of them. I cannot find a single media outlet, I don't care who it is, right, that is not trying or misunderstanding and promoting misinformation, right? I cannot find a single one. In fact, I find it prevalent within the YouTube community itself. People who are not mainstream, right? And even those are regurgitating the same misinformation. It's because a lot of them are getting information from each other, right? And they just kind of, rehash out and say the same things, only in their own speak, in their own opinion. But very rarely do I find them saying, okay, hey, we are breaking down the monetary policy strategies going back 20 years, incorporating speeches and statements that are so profound to the idea of what happened to monetary policy and the loss of ability to then stimulate the economy through interest rate adjustments. Understanding this process took 20 years to get through. Setting up of the communication styles, figuring out what it was that they were going to do at the lower bound, the asset purchases, the communication styles was, I guess I already said that, but the communication style was the most important part. That's why I keep saying it, right? But again, like, once you see it, you can't unsee it. Like, once you see it, then you recognize what it is that other people are talking about, right? I don't know how many people tell me, oh, gold standard would fix all of this. And it was just like, no, it wouldn't. It would make it worse. And everybody would be suffering in poverty because of the Cantillon effect, right? I mean, the most industrious people would hoard all the money and everybody else would suffer in pain. It's just like, it's obvious to me the gold standard was a terrible, terrible form of monetary system that kept prices very stable. So it had a benefit and a horrible, terrible feature, right? So again, like, I'm cool with gold and silver. I think you should own as much as you could possibly get. But as far as a government being or as far as a world currency or currencies being backed by gold, that would make this country suffer in pain. Our standard of living is far too high. We import far more than we export. We don't produce enough for ourselves, and our standard of living would collapse if we went onto a gold standard. So it's not a good idea. Carrying on with the fiat currency is also just as bad. Right? It separates the rich from the poor. It makes the inequality incredibly worse. It doesn't give you much opportunity to then move on to the other side of the wedge if you have not started from the time you were like a teenager to try and get on that other side of the wedge. So basically what I'm saying from that is, the longer the fiat currency system goes on, the less opportunities there will be to get into that position of which you would have like a decent retirement and a decent life or whatever. It's going to be a struggle, and it's going to be a painful experience for most people who can't get on the other side of the wedge, which is becoming more prevalent for the people, considering that the fiat currency that continues to pour into the system creates the wider wedge. So which one do you want it? Like, I mean, you hate inequality, but you hate poverty. So which one do you want? Like, you can only have one or the other. You either have inequality or you have poverty. Right? And now there is a short amount of time in which that you come out of poverty into a higher standard of living, in which that things are going to be really awesome and we can be on a gold standard for that, but it's very short-lived, right? It doesn't last very long. And it was proof of it. I mean, we saw it happen in this country, you know, basically after the 30s and going into the 60s, and then finally at the 70s, they were like, okay, we can't do this anymore. Yeah. Alrighty, guys. That was a lot of fun. All right, everyone is a capitalist. That's right. Everyone is a capitalist, GMA. I totally agree. The best option is just to ride fiat currency out until the collapse and gradually reposition yourself to other asset currencies. All right, okay, I got to go because I got to go back, but I'm just going to leave it at this. Let's pull it back and think about this one more time from from a more primitive position. All right, back before all the industrial evolution, all this other stuff. Gold was the form of currency. Everybody used gold. And because everybody used gold, some people were really good at acquiring it. They were more industrious than the others, and they got a pile of this gold. That gold went into storage. Because it went into storage, other people saw that and said, hey, because you have a nice safe storage, I want to store my stuff with you too. All right? This is where the goldsmiths, the jeweler, everybody, like the people who had the gold, ended up storing it in a safe, right? And because they had a safe, they issued out IOUs, right? So that you would have your claim ticket to get back to the gold. Those IOUs ended up getting used as currency out there in the markets because it was so much easier to use those paper currency or the paper IOUs than it was the actual physical gold, which was sitting in a vault. Now, as the people recognized that this was happening, right, they started issuing out a lot more IOUs than the actual gold that they had because the people out there were demanding it to do transactions very much like the oil deal is going to be done, right? They want to do oil deals, but there's just simply not enough gold out there to do all the oil deals, but there's plenty of dollars, plenty of IOUs in order to facilitate the trades. So people want the IOUs so that they can go to work. They want to trade their carrots for something else, right? So again, the idea that the gold was sitting in a vault and the IOUs got pushed out there. Now, there was men who noticed this and said, hey, this is a bunch of crap. You're printing out IOUs for gold you don't even have, right? And all these people out there are doing commerce with these IOUs for gold that you don't even have. And it was just like, you can't be doing this. This should be illegal. This should be against the rules, the laws, right? People with the gold were sitting there going, yeah, or whatever. They're demanding transactions. I don't know what to tell you. We're going to be issuing out these IOUs, and we're going to spend them at face value, and we're going to take advantage of the situation because they demand it. Right? And so that individual is calling it out, saying, hey, this is horseshit. I don't like this. I don't like the idea that you're issuing out all this paper currency, causing all these people out there to believe that they have access to gold that they really don't have. And the people are, well, too bad. I mean, it's gonna suck to be you. I'll tell you what, man. How about you let me borrow some of them IOUs? Right? I can borrow them IOUs from you, and I'm gonna go over there and I'm gonna buy some rental properties. I'm going to buy properties and rent it out to all these other people who are using these IOUs since they don't really exist and it's all fake anyway. I'm going to take advantage of the situation. How about that? And the people with the IOUs say, you want to pay an interest? Sure. We'll give you some IOUs. Why not? You see what's happened here? See, this is the real situation. You can take it back as far as you want to go, but this is how it went down. Right? Now, you can blame politics, you can blame individual men, you can blame bankers, you can blame families, you can blame all kinds of stuff, but the fact is that you wanted to work. All right? You wanted to be able to trade your carrots for other services. You wanted to be able to make sure that whatever it was that was taking place out there, that you would have access to the fundings, to the money. And at the same time, we want to blame these people for creating a situation in which that the inequality is now running so hugely inappropriately big, right? I don't even know how to describe it. It's so out of whack. But this is how it happened. And now again, we could have gone back in the day and say, hey, we don't want to do transactions. We don't want the IOUs. We don't want to be able to facilitate these trades as easily as we're doing it. And then we wouldn't be in this situation right now. All right? I mean, it's not hard to see. it is hard to find a solution to, because there is no solution. This is survival of the fittest, and that's why it's so painful for a lot of people and so, and awesome for others. But there's no changing. Like, it's just the way it is, and we have to figure out how to conduct ourselves in it. All right, I gotta go, guys. Uneducated Economist, thank you so much for being here. We got 312 people watching with 175 likes and $4.99 in super chats. Because you guys are always so generous with those super chats, I really appreciate it. We'll give it a spin on the dice. All right. Uneducated Economist, you guys let me know.